your number one asset is yourself. It's your ability to create, it's your ability to produce, all those things. And so if you're not working with someone that says, how can we protect your income and your assets in the best way possible first, instead of how can we grow your money, then you need to take a step back and ask, hey, why are we so focused on growth and not as focused on protecting?
If you wanted to self-insure your home that's paid off, it would cost you $50,000 a year. Or you could pay $5,000 and just insure it so you have the $1 million to go do something else with.
What do you want to accomplish? What matters to you the most? What's important to you? Where do you want to spend the majority of your time? Why do you want to spend the majority of your time there? Are you already making a clear path to that? And are you pleased with the shot you're taking and how it's rolling off your fingertips and how it's almost always going in the basket?
Welcome to the Cashflow Legendz podcast with your hosts, Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. Nate, Brock, and I are stoked to be here with you. First and foremost, thank you for taking the time to listen to these three dudes go on about what they believe so passionately in and what we believe in. And we just do not take lightly anytime you join us. We hope it brings value to you. And just remember, if there's any question you ever have, don't hesitate to put it in the comments section on YouTube or leave us a comment somewhere else, or go to our website, cashflowlegendz.com, and you can find anything you're looking for there as well and how to connect with us. So, guys, here is a really cool topic today for us, because we're probably nerds and we enjoy kind of talking about this stuff. Hopefully it brings value to somebody else. Is life insurance really necessary? Now, we can go down a ton of different paths for this conversation, but just in general, is life insurance really necessary? And what do we hope people know when that question's asked?
That's a great question there, Brandon.
Thank you.
The answer to your question is no, it's not necessary, but neither is drinking water. Right. It's how optimal and how healthy you want your financial life to be, or how healthy you want your body to be, right? It's not necessary, but if you know how wealth works, if you know how life works, you're going to want it, and you're going to want as much as you could get.
That was a really, really good high-level response. That wasn't even scripted. Very nice.
Thank you.
Nate, you want to add anything to that? That's pretty good.
Well, it's one of those things that at an early age, if you listen to enough adults, when you hear them talk about insurance, a lot of people say it's like a necessary evil.
Mm-hmm.
And as you start to understand what's really going on, you find out it's not a necessary evil. It's actually a powerful tool, because insurance allows us to offset some of the risk that we would normally take on ourselves. And so we can assume all the risk ourselves and be what some would call self-insured, which just means you don't have insurance. Or we can offset some of that risk to someone else. And then in that case, gives us the ability to play or, enjoy our assets, or make some different decisions than we normally would. So like if you buy a brand new vehicle, as an example, we're talking about car insurance, and it's a $50,000 vehicle, and let's say you pay cash for it, you could just start paying yourself whatever that insurance premium is, and be self-insured. But at the same time, you never know what's going to happen. And so you could pull out of the dealership and somebody stops in front of you and you run into them. Well, now that decision doesn't look so great. So, we don't have a crystal ball. We can't tell the future. So the best thing that we can do is use resources and tools that we have available to us to create some sort of certainty or predictability for the future.
I like those connecting points that you guys both made about certainty. And Brock said the word optimal. So I want us to zoom out and go, this is a first time listener. They've never heard anything about insurance. Okay. And let's just talk about what is life insurance in its most basic form.
Great question. I'm qualified to give this answer because I actually have a degree in risk management and insurance.
I was waiting for you to drop from where, because
That one was from Middle Tennessee. So
okay.
it's not as cool, but I will say it was the #1 school in the world for risk management and insurance while I was there. So
Brock,
I'll
I
give you
got to
that.
stop you right there. When Nate and I felt the Lord convict our heart to ask if you want to do a podcast with us, we did not know all of your educational background, but I'm sure glad that it's a part of the package, because you make two East Texas country boys look really smart. So go ahead.
Nice. Thank you. Thank you. All right. So insurance. Insurance is a tool used to indemnify the loss of an asset. So when we talk about life insurance, what we're doing is we're transferring risk from ourselves to an insurance company who says, if we're looking at Nate here, Nate, you are an asset to your family. The asset is you being able to produce an income. Most people buy life insurance just to take care of debts, funerals, and maybe sending kids to college, whatever else. Most people don't realize that there's an equation that life insurers use called your economic life value or replacement of income. So they would take a multiple factor of your age to age 65 and multiply that by your gross income, and that would give what's called your economic life value. That is how life insurance is made up. You transfer the risk to the insurance company by way of premium. If and when you pass away, that death benefit will be paid to whoever you designate as the beneficiary.
So indemnify just basically means it's basically saying that I'm going to create this much value, and I can prove that,
Mm-hmm.
and that value is going to be replaced when you're no longer here, depending on the product used. So let's talk
Yes.
about product basics real quick, on a very simple sense.
Yeah.
Which,
Indemnify means to make whole, I
yep.
think.
Okay.
I'm
Yep.
not looking at the dictionary, but that sounds right.
I pulled it up. Compensate for harm or loss is one of the definitions.
All right. There you go.
Now that we know, we learned a big word today, or we were reminded of what it meant. Okay. At a high level again, most people in the world understand that there are two different type of life insurance products. Categorically, you've got term and whole life. Nate, at a kindergarten level, explain the difference of those two.
So, term insurance is exactly what it says. It is for a specific or designated amount of time. So, often term policies, you're going to get a 10-year term policy, a 20-year term policy, 30-year term policy. And in the life insurance world, the chances of those policies paying out is very, very slim.
Give us a
Odds are on-
percentage,
Yeah.
roughly.
I want to say 98% of term insurance policies never pay out a death benefit.
98.9.
Yeah, there you
Almost
go.
99, 98.9. Okay,
Yeah.
cool.
So the odds are always on the house. Term insurance is often the #1 profit center for an insurance company because very little of those policies are ever going to pay out. So you do get to pay a very, very small premium for a death benefit or whatever because they're only guaranteeing that for a certain period of time. But if someone has ever had a term policy renew, which means they actually live past the term, they're going to find out that now they're going to be playing catch up on all the premiums that they did not pay, the 10 to 20 years before, because essentially at that age, your premiums are subsidized in a way because the probability of loss is so low. So now when that policy renews, your probability of loss is so much higher. So the premiums are going to increase. And so a term policy is just that. It's for a specific amount of time. There's no cash value that is created from a term policy, so there's not any sort of banking function or borrowing function or anything like that exists for a term policy.
Okay.
A whole life insurance policy is exactly what it says. It's for your entire life. And it's a fixed premium, and it's really based on whatever level of death benefit you need for that time. Whatever need you're trying to satisfy as far as the premium goes. But that premium is going to be fixed over your lifetime, which means as long as you pay the premiums, the insurance company guarantees to pay out the death benefit to the beneficiary one day. And a whole life insurance policy does create cash value. Another term for cash value that someone might be familiar with is equity, which is the value of the asset that you have ownership in, so to speak, that you own and control. So cash value in the insurance world is just the equity inside of the policy. A term insurance policy is not necessarily an asset. It's really more of a liability, because the only way that you win in that equation is if you die. So that doesn't really sound like much fun. With a whole life insurance policy, you actually get to enjoy, you actually have some benefit or some utilization of that policy while you own it, while you're still living.
Okay. With those basics of whole life and term life, Brock, when you speak to people that are newly coming to this process of what is this really? So not somebody who's done a lot of research and done, they're just asking basic questions. Do you kind of walk them through what human life value really means and how important it is to understand what that means, to go from thinking I only need a little to understanding I want as much as possible? Does that come up often somewhere in your process?
Yeah, I think it, as we're building out our clients' financial doctrine, I think it comes up every time. And so one of the things that we need to talk about is, in the traditional sense of financial planning, there's really three phases of wealth, right? There's three phases that our money goes through. The first one is accumulation. This is where we have an income and we have expenses, and we're taking the difference of those and sending them to assets to grow over time so we can, what most people would say, retire. We want to reach our maximum financial potential so we can retire. The second phase is the distribution phase. And in this phase, we are trying our best to spend and enjoy our money, hopefully with the peace of mind we won't run out. And then we have this legacy piece, right? This is where we are passing on our money, but we don't want it to just be money, right? The problem is we have no idea where that legacy line is at on our life's timeline. And so the question that we have to answer for ourselves is, if we're 35 today and retirement age is 65, do we want or do we hope that continues to have the dreams and hopes and desires that we have today while we're here to produce? And will they be able to produce that? Two only ways that we could do that. Make sure we don't die and produce all the income and make sure we make it to 65. Or if something happens, have a big pool of money, big pool of capital to produce that income for us. And so if you are somebody who says, yeah, I want my family to continue the dreams and hopes and desires that we have now while I'm here to produce, then you got to look at the amount of life insurance. Do I want part of my income to be replaced, or do I want all of my income to be replaced in the event that I check out early?
All right, let's touch on that real quick. We all agree the power of questions gets us to the solutions we know we want. So I heard this said yesterday, and it was really, I think I'm going to use it often. We cannot get to empowering answers by asking disempowering questions. Said another way, when we ask disempowering questions, we're not going to get empowering answers. So here is an empowering question. Brock alluded to it, that I'll use sometimes when we're talking to people to try to make a connection to human life value without thinking about life insurance for a minute and thinking about something else they understand. And Brock, I think we got this from your dad, and he probably got it from Bob. I'm not sure where it came from originally, but we will ask people, would you ever underinsure your beautiful home? And we'll just sit there and we will not respond. Sometimes it'll get a little awkward. Hey, why do you believe this? Because why you believe it may be way different than why Brock believes it. Maybe way different than why Nate believes it. Maybe way different than why I believe it. Nate, when we ask somebody that question, would you ever underinsure your home? What kind of responses do we typically get?
No, why would I ever do that?
It, that's pretty
No,
much it.
I mean, I've used the example very similar to that. I've used the example, if your insurance agent called you today and said, "Hey, I got great news. I can save you 50% on your homeowner's insurance." You're like, "Oh, that sounds awesome." And it's like, which half of the house do you want to insure? Well, then now that doesn't sound so great. But when we are underinsured, when we're not properly protecting our income and our assets through the product and the tool of insurance, then that's effectively what we're doing. We're picking and choosing what's important. And as we talk about so often, your number one asset is yourself. It's your ability to create, it's your ability to produce all those things. And so if you're not working with someone that says, how can we protect your income and your assets in the best way possible first, instead of how can we grow your money, then you need to take a step back and ask, hey, why are we so focused on growth and not as focused on protecting? Because in a qualified plan, as an example, or really any sort of long-term financial strategy, if you stop producing income and you have no protection for that income, then that long-term financial strategy falls apart. Because the only way it still works is if you can continue to feed it. So if you're not protecting your income and your assets in the best way possible, then you need to question why you're investing in things without investing in yourself first.
That's really good. So a lot of times, this is for my parents out there. With 4 kids, as you go through parenting a new child and then another one and another one, you reflect back and you go, man, I was an idiot. I wish I'd have known then what I know now. And that would have saved me a lot of headache or heartache or pain. The point of that with anything in life is once we realize something is so valuable, we don't ever want to live without it. We want as much of it as possible. But we have to be willing to go on a journey to understand why we want it. So, Brock, question for you. Why do you think if everybody agrees they'd never only choose to insure half their house, or they'd never only choose to insure half their car, or they'd never only choose to insure half their yacht, why do you think people are so heck bent on not insuring their greatest asset themselves?
Yeah, I think it goes to a couple of things. The first being not actually knowing what your financial life is going to do. I rarely, and I mean rarely, meet somebody who is onboarding with me or I'm just talking to who has seen their financial life on one page and seen it walk through. And what most people think is, oh, I don't want to spend too much on the life insurance, specifically permanent insurance, because it's going to cost me retirement income. Because what they think is if I put money in a whole life policy, my nest egg is not going to be as big. So as a result, I will have less income. That is what is preached all the time through financial advisors and everything. They say it's a low rate of return. It's got a high commission. You don't need that. You can self-insure. And I can't wait to dive more into that because I got some great stuff to talk about.
If I heard you correctly, would you agree that it's fair to say that most of it is a lack of empowering questions that have been asked, or a lack of walking through a process to help you get clarity on why you would want more than what you thought you wanted?
I think it's both
Okay.
because, I mean, being a financial advisor is the easiest thing in the world. And all you,
Kind
all
of
you
like
got
a
to do,
weatherman.
I know, all you have to do is say, hey, when do you feel like you want to retire? Okay, great. How much income do you think you want to retire on? Okay, awesome. Well, that means we need this much in assets. So you need to save this amount every year. And then all you got to do is manage not the money, but the emotions of the person that you work with to make sure that all they do is just put money into the market through retirement plans and the brokerage accounts and whatever else there is out there to say, hey, you know what? Just keep investing, just keep dollar cost averaging, and trust that miracle of compound interest will kick in one day. And that's great, sure. And they'll tell you, hey, when you get to retirement, you won't need as much income, so don't worry about it. You're gonna be okay.
Well, I know that both of y'all's parents, you still have them, but I have a personal experience with life insurance. I lost my dad in 2012 to cancer. Fortunately, he did have life insurance in place that made every decision we made leading up to his death and after his death a whole lot easier because it was all based on practicality, not based on fear or scarcity or anything like that. And so he being the breadwinner meant that my mom was going to have a huge gap to overcome when it came to income and stuff like that. But because of this lump sum that she received, we were able to make very easy decisions for her. And the the thing that I got to experience personally and what I know now is that when you are dealing with a loss, dealing with grief, and there's a financial burden that comes with the grief, it compounds the grief. It makes that process so much harder. And when we're talking about self insurance, I know, unfortunately, that Dave Ramsey tells people buy term, invest the difference because once you're debt free, you won't need life insurance. But he has said it on his show multiple times that he still has life insurance because a few reasons. But one, I believe he understands what I just said, which is when you're dealing with when you're dealing with a grief or a loss, and there's a financial burden that comes with it, it compounds that process. And he's got a lot of assets to protect, a lot of income to protect, and he wants to make sure that his family is set up and doesn't have to come out of pocket for, all of those assets or resources to make up for all the value that he creates. And he would never say that he has whole life insurance on his show because he would have to he would have to go delete a whole lot of content. But if you understand how money works, it's really hard for me to fathom a situation where somebody who has that much to protect doesn't have some sort of permanent strategy in place.
It's good stuff. Nate, what really jumped out to me when you're talking about the compounding of grief is when you're sitting and visiting with anyone and they have a buffer of money that they control above their monthly expenses or lifestyle expenses. There's a resounding consistent theme that normally they are more at peace than if they're living day to day trying to make ends meet. See this over and over again. When we recognize that human life value is a really good opportunity to just express the truest condition of our heart for the things that matter to us the most, then it really takes on a whole nother meaning. So here's another thing too, Brock. You mentioned optimal earlier. I think one of the reasons that this is such a misunderstood conversation is because majority of the world thinks it's either or.
Mhm.
And what we know is when you bring all of your financial data to one place, all your best decision making to this point to a place where it can be reviewed and discussed, that oftentimes, if not always, there's a clear path where protecting your human life value is just going to make everything else you want to do more efficient, more clean, more possible. Touch on that for a minute.
So first, I'll talk about most people insure for the inconsequential and neglect the catastrophic. So what I mean by that is if somebody's gonna, if you get in a little bit of a accident and somebody knocks off your mirror, probably gonna pay out of pocket for that, not your insurance. So raise your deductibles. Just pay it out of pocket. But if it's gonna accident, you'd want that as a insurance claim because you don't want to use your capital for it. And I think one of the things that a lot of people don't realize, Nate touched on it a little bit, but if you had $1 million home and it was paid off, would you cancel your home insurance? Probably not. And how much is the home insurance? $5,000 on $1 million home.
Yeah,
Let's say it's
probably.
$5,000, okay? And it's a paid off $1 million home. If you cancel that home insurance and you self-insured your home that's paid off at $1 million, what would you need set to the side?
More than $1 million.
More than $1 million.
Yeah, at least $1 million. Let's say at bare minimum $1 million, because you said, hey, if it burns down, I'm okay with getting a little bit less. Well, that means that $1 million that we have set aside, we cannot go do something else with it. So even if we put $1 million in a high yield savings account right now, that most people think is they're going to last for forever, and let's say that it's 5%. What is 5% of $1 million? I think it's like 50 grand.
Yep.
Okay, because 10% is 100,000. So 5% of $1 million is 50 grand.
Yep.
What that means is if you wanted to self-insure your home that's paid off, it would cost you $50,000 a year. Or you could pay $5,000 and just insure it so you have the $1 million to go do something else with. The same is true when it comes to retirement planning. You can either get to retirement age and just have money in the bank that now has to be your insurance, and you have to become a slave to the market and the interest rate fluctuations, a slave to the government with taxes, and a slave to our economy through inflation. Or you could set some dollars aside throughout your working lifetime to ensure a guaranteed event that's going to happen, aka your death, because we all live until we don't, that allows you to free up and give you options on how to take income from your other assets. And it's not going to cost you money. It's going to actually increase the money.
There's something that I think Garrett said not long ago, Garrett Gunderson, in a conversation with, I don't remember what we were watching. Nate brought it up. Nate, it might have been in your mastermind with him, but we have to get over some preconceived notions we have, but we first have to decide why we want to get over them, because arrival syndrome, as Nelson Nash talked about, is real. It's as good as it's going to get. You can't teach me anything new, whatever the case may be. But Garrett makes this point that we have to realize that we are either going to pay more than $1 for insurance coverage on our home, on our boat, on things that matter to us the most, or we're going to pay less than $1. And that's really what you're alluding to, Brock, is this reality that I can lock in known things at a cost that I can know, or I can roll the dice on a cost I don't know for a catastrophic event that I'm willing to roll the dice on that may or may not happen. And what happens normally that I love about what we do is we eliminate guessing. Well, how do you eliminate guessing? Well, you first got to know everything that's going on. So if you just tell me about your investment portfolio, but I don't know your cash flow mindset, I don't know how much you underspend or overspend, I don't know where your protection is in place, I can't help you. Like, I would be guessing. It would be like walking in the dark. It's very similar to what do you need in 30 years? That is guessing. I don't know what I need next week. I like an idea of saying I want this next week and I'd like for this to happen, but the reality is that every day is different. Nate, what you thinking?
Well, when you're talking about guessing, it reminds me of actuarial science and how they take almost all the guesswork out of the law of large numbers. So they have a very, very long history of being able to look back and determine exactly what that looks like from a death benefit perspective. And what's really cool about understanding a death benefit on a whole life policy, and this comes from Garrett, I've used it before, what you're effectively doing is you're buying your net worth, and now you get to build into that. It takes the guesswork out of what your net worth is going to be in the future, because you can actually secure chunks of that along the way, because the actuarial science has been done for you. So they show you, as cash value shows up in your policy, what they are telling you is this is the current value of your future death benefit.
Mm-hmm.
So it's really powerful because whole life insurance does take the guesswork out of what is my future going to look like.
And Nate, what I love about that is that's one dimension of the reality. And so what I mean by that is this. and I'll use this example often when I'm talking to people. If they really have a preconceived notion about human life value and the impact that protecting your human life value can have, I'll just walk through it like, where do you normally keep your money? Well, I like to keep it in a savings account, a high yield savings account. Okay. Does that high yield savings account offer these things? And I'll start listing some of the guaranteed characteristics of whole life without even mentioning whole life. And the answer is no, no, it doesn't. No, it doesn't. No, it doesn't. And then I'll say, well, would you like for your dollars to have those guaranteed protections matched up with a guaranteed event? And yet, has someone gone, no, I don't want that? Because what you really do is you remove the thing that's limiting their belief system right now, or they have dissonance on, and you're just describing it in a very basic, matter of fact approach. Hey, if there was a savings account over there at Chase Bank that offered these things, how long do you think the line would be for people to put their money into that savings account if it offered 3, 4, 5, 6, 7, 8, 9, 10 things that could benefit you, your life, your family, your goals? And then I just let them sit there. On human life value, here's another way to think about it for all my, I'm going to speak to dads right now. When I'm visiting with a dad and they want to understand what I'm doing or what I do, and they have basic questions, which is great, I'll sometimes ask this question of, hey, if you knew tomorrow you could no longer work, but you were still here, would your income continue at 100%, 50%, or would it go to zero? And so I'll let them answer that question and think about it for a little bit. And then I'll say, what if you knew for sure that you could keep it at 100%? Would you want to explore that? Notice we've not said one thing about whole life insurance. It's just a question. And Nate, you and I have been asked this question, and it was very uncomfortable because the reality was is we were like, our income would take a dramatic hit if you and I couldn't work, but we were still here. So then that brings into this conversation, well, what would somebody need to do to be able to say, yes, I would want as much income for as long as possible to continue as optimally as possible? Now we're on the path of some discovery. Brock and Nate, our favorite mindsets to work with are people who say things like, I'm sure I have a misunderstanding of this, so I'd love for you to give me some clarity on it. Or I haven't fully understood this yet, or I'm sure there's a limiting belief I have, or I'm going to go back and do some research and come back and ask more questions. There's nothing better than that, in my opinion, because that means that they are becoming self-aware of what they want to accomplish. The dollars and how they allot them is purely an efficiency approach. Can I make this dollar do multiple things for me to create the value of my life that matters to me the most? Whether my plan works according to plan or my plan goes kaput and everything goes upside down, will my plan still work? All right, Nate, what are a couple of things that you help people really understand and see when they're going through the life insurance needs? Do you ever help people understand that?
Yeah, I mean, you can, going back to human life value and that calculation, just at a very basic level, you can look at somebody's age, subtract that from however many working years they have left, and then multiply that by their income and get a pretty decent determination on what an insurance company would be willing to insure them for if they're healthy and everything like that. And so when you show someone that and you ask those questions that you mentioned earlier about, if you're not able to create value, whether you're working or you're no longer here, how much of this do you want to protect? Coming from that place in that conversation, it creates a little bit of a different answer than would normally if you were speaking from a different perspective. And the reason for that is when you ask the right questions, people will start to recognize things that they did not even realize that they wanted.
Yep.
I've used this example. We talk about this all the time. You alluded to it earlier. We didn't know that we wanted disability insurance until somebody asked us the right question. And then it wasn't something we needed. It was something that we wanted.
Yep.
And people, just in general in life, we will spend money on things that we want more than we'll spend money on things that we need. And if you have a desire for something in life, you either decide, how can I make this happen? Or I don't have the money for it. Like those are the two, you kind of go back and forth in your mind. You're going to lean one way or the other. And if it's a want, it's typically, how can I make this happen? What can I do to get this thing?
Mm-hmm.
If it's a need, it's, oh, I don't really have the money for it.
When we think about wants and needs, we have to be asked the right questions to turn something that we thought was a need we didn't hope ever happened to a want we can't wait to have in play to guarantee the things we want to occur for the things that matter the most. A lot of times when we're having conversations with people, Nelson said this, Nelson asked, once we know what the problem is, we'll know what to do. And Nate, you say something often. What is that you say about knowing what we need to do and staring it in the face?
Well, yeah. So, how often do we find ourselves in a situation where we have a problem? We know what the solution is, but we stare at it with absolute contempt. You know, there's so many things that we know what we need to do to get us out of that situation or whatever, and we'll just, we'll sit in our mess a little too long. But one of the things I thought about just now is these questions really reveal things that we already know, that we want certainty. We already know that we want control. We want freedom. We want opportunity. We want all these things. We want efficiency. But until we get the right question asked to us and we find the right teacher, we never know how those things can get us closer to certainty, control, efficiency, liquidity, peace of mind, freedom, all those things. So that's really what it boils down to, is understanding how these things can actually work together, how your financial life is all connected, and how it starts moving you that direction.
Brock, when people ask you what you do, what do you tell them?
Honest, I don't usually get that question, but what
Okay.
I typically do say is, I got a lot going on. I operate and own a bunch of different companies, but what I'm most known for is helping families get out of the default structure of their finances and their life so that they can really start living on purpose.
It kind of goes in line with what I have different ways I'll ask questions depending on who it is, what background, what conversations we've had. But, if it's somebody that knows me well enough to know that I'm doing something different than the traditional norm, I'll say, I give people the opportunity to opt out of financial failure. And that brings people to the precipice or the forefront of, well, what does that mean? So I had a visual thought here real quick. And I'm really wanting to make the connection for anybody listening on why we love what we do so much, is because we are not guessing. Okay. That sounds pompous. I don't want it to sound pompous. We are eliminating guessing by collecting as much factual information as we can. And it would be no different than if Brock, Nate, and I all walked into the gym and Michael Jordan was in there. First of all, how cool would that be? But second, he says, all right, guys, I want to see all your 3-point shots because that's what you're here for today. And he said, I want to know what your problem is. Well, I can't hit but 10% of every 100 shots I take. Well, that's definitely a problem if I'm going to be a 3-point shooter. Okay. Would Michael Jordan begin to tell us what we should do before he ever watched all moving pieces of our shot? Or would he watch us shoot and see all the things we do and then give us some coaching?
If he was talking to the masses,
Yeah,
he'd give you the solution right away.
absolutely.
If he is one-on-one and
There
he
you
is
go.
speaking to Brandon
Mhm.
or Nate or me, the likelihood is he's going to first say, hey, let's check this out. Let's see what's happening.
Yep.
And I think that correlates really well to our lives today, right? most people will take advice just in general from the people who just say it to the people in general. But once somebody sits down one on one with somebody and they're able to look at their financial life in their unique situation, it changes.
That's right.
Or we hope that it changes. Most typical advice doesn't.
Yes.
I I think that's a good point also because, we don't get financial advice, but the things that we talk about, we want people to go test those things, you know, like we love for people to challenge us in our thinking. So if you hear stuff, like go out and test those things, like press into that stuff. Because as we said, this is not guesswork or anything like that. These are proven strategies that we are using in our lives, that we've seen other people use in their lives, that they're having success with. So if something has been proven, then why wouldn't you at least explore it? Like there's enough people out there, and there's a long enough history of life insurance to determine that there are in any sort of financial product on the planet, there's good stories and bad stories. Often the bad stories were with someone who didn't really have a plan for what they were doing. They didn't fully understand what was going on. So that's why we're so adamant about education. Like we want to make sure you have a very strong foundation of understanding on what this is and what it's not. And we're not going to recommend to anyone that they implement a strategy that they don't understand.
The more in depth we understand something, the better questions we can ask, and the more clear we know what we want to do next. Because it is not ever me, Nate, or Brock saying, this is what you should do or you're stupid. This is what you should do or else. This is what you should do or you won't be successful. It's, hey, here's the facts. Here's what we know to be true. What do you want to accomplish? So when you shoot that shot in your daily life with your finances, do you like right now that you're 1 of 10 from the field, or would you like to increase the probability of 5 out of 10 or 7 out of 10 or 10 out of 10? What do you want to accomplish? Because what I also see on the other side of that is guys making daily decisions, but they're 2 degrees off, and it's getting them further and further from the target because nobody's ever asked them, well, what's the real target? What do you want to accomplish? What matters to you the most? What's important to you? Where do you want to spend the majority of your time? Why do you want to spend the majority of your time there? Are you already making a clear path to that? And are you pleased with the shot you're taking and how it's rolling off your fingertips and how it's almost always going in the basket? Have you had anybody ask you these questions? And the reality is that the power of the questions that we're willing to be asked will be directly correlated to the power of the opportunities we learn to take advantage of because of the questions we're willing to be asked. I don't like when Brock asks me why, the way he asked me why, but I have begun to really enjoy when he does it after the fact because it's intentionally helping me and Nate get clarity on, well, why does that matter to you? Why are you working towards that? Because he knows it doesn't matter what he thinks. It's not his life. Why do you think that way? Would you guys agree with that?
I would agree. And I want to say thank you for being somebody in my life that is okay with me asking why. Because there are some people, one of them being my girlfriend, saying, we don't have to know why. It is what it is. You
Oh,
just,
I can't stand that.
for example, last night we're walking down the stairs going to dinner, and the walls of the parking garage were concrete. And I'm like, man, why, how do they make these things? Why do they stay up? Why, what's going on here? And she's like, we don't need to know. We can just trust that they're up. And, but there are some things in your life you have got to be asking why. Why am I doing this? Why does it look this way? Why are the things that I'm doing important to me or not important to me? Why have I accepted this thing that I'm doing? Why have I not accepted this thing that I'm not doing or that I am? Why have I listened to the person that has given me the advice that I have?
It's
I
good.
think the best the best opportunity to ask why is always based on our behavior and our actions, not what other people are doing. As Jim Rohn like to say, I wouldn't spend too much time on that. When you're trying to figure out why other people are doing what they're doing, focus on your decisions, your behaviors, because that's where you're going to find the most value.
That's a great point to kind of tidy up today. If you don't know why you want to do certain things, no one's going to help you figure out how to do it. You got to know why first. You got to know what your targets are. You got to know why you want to go there. And then you can start creating a clear plan that you feel good about once you know why you want to do that. All right, guys, next week, I'm preparing you now. We're going to be talking about the greatest financial failures we have experienced and how we've recovered from them.
Nice.
Or what we've learned from them, or what we wish we would have known then that we now know, or what we're even learning at this very moment. Because I got a hint for everybody. Nate, Brock, and Brandon don't have it all figured out. We are going through this life trying to grow and improve and have people ask us tough questions to allow us to get clarity on our why as well. And praise the Lord, we serve a risen Savior that has tons of grace and allows us to do that on a daily basis, or we'd all be in big time trouble. So, looking forward to being there with everybody next week. We are so thankful you spent your time with us today. If we brought value, we love 5-star reviews. If you don't feel like it's a 5-star, just call me and tell me why. Don't put it on there unless you just absolutely need to. But that helps the algorithm. And guys, I don't know if you noticed this, but the algorithm is strong. So if this brings value and you share it, it'll get right in front of who it needs to get in front of at God's perfect timing, which is something that we've gotten to experience, which is really cool. So hope you all have a blessed day, and we will catch you on the next one. Talk soon.